All right, welcome back to the AG Insider. I am Captain Silver, and I need you to listen to me very carefully because what I am about to tell you is not speculation. It is not fear-mongering. It is the cold, hard reality of what just happened this weekend and what is about to happen to your wallet, your savings, and your ability to survive in this economy. The era of cheap energy and stable prices is officially dead. It died this weekend. Following the massive weekend strikes involving 80 fighter jets and the complete destruction of 42 Iranian naval ships, President Donald Trump has issued a severe warning that Iran will be hit very hard. This is not a negotiation. This is not a diplomatic chess move. This is a declaration of prolonged kinetic war, and it guarantees $100 oil, and it plunges the American economy into uncontrollable stagflation starting right now. This is not a drill. This is not a hypothetical scenario. This is happening in real time, and the clock is ticking. Now I want to ask you a very direct question, and I want you to answer this honestly in the comments below. Are you prepared to pay record-breaking prices at the gas pump tomorrow morning while your wages stay exactly the same? Are you ready for the cost of bread to double while your employer tells you there is no budget for raises this year? Let me know your stagflation survival plan in the comments below, because I guarantee you 99% of the people watching the mainstream news right now have absolutely no idea what is about to hit them. They are watching the same sanitized propaganda that told them inflation was transitory in 2021. They are listening to the same talking heads who said the banking crisis of 2025 was contained. And now those same liars are telling you that a war with Iran is manageable. It is not manageable. It is an economic death sentence. Let me break down the mechanism for you, because this is not complicated if you understand basic supply and demand, and if you understand what happens when the global energy choke point gets militarized. The Strait of Hormuz is functionally closed right now. Not officially closed, but functionally closed, because when the commander-in-chief of the United States military signals a massive military escalation. Now I want to pause here for a second, because I know the mainstream political commentators are treating this war like a game. They are sitting in their air-conditioned studios talking about military strategy and geopolitical chess moves, and they are completely ignoring the economic death sentence this means for the middle class. They are not talking about the single mother who is about to choose between filling up her gas tank and buying groceries for her kids. They are not talking about the small business owner who is about to watch his profit margins get obliterated by skyrocketing diesel costs. They are not talking about the retiree on a fixed income who is about to watch inflation destroy the purchasing power of their Social Security check. Those stories do not make it onto CNBC. Those stories do not make it onto Bloomberg. But those are the real stories, and those are the people who are about to get crushed by this war. So if you appreciate this channel giving you the raw, unfiltered truth that the mainstream media will never tell you, I want you to consider hitting the super thanks button right now to support this work, because I am not getting paid by hedge funds. I am not getting paid by defense contractors. I am funded directly by viewers like you who want the truth. All right, let me talk about the action plan, because I do not want to just scare you. I want to give you a path forward. In a stagflationary war economy paper, assets like stocks and bonds are going to get slaughtered. Stocks require growth to go up, and there is no growth in a stagflationary environment. Bonds require stable inflation and low rates, and neither of those things exist anymore. So the traditional 60-40 portfolio is dead. It died in 2022, and it is about to get cremated in 2026. The only historically proven way to protect your purchasing power in a stagflationary war economy is through scarce tangible assets. I am talking about hard assets that cannot be printed, that cannot be debased, and that have intrinsic value. And right now at $82 per ounce, physical silver is the most undervalued wartime asset on the planet. Let me repeat that. At $82 per ounce, silver is the most undervalued wartime asset on the planet. Gold is over $3,000 an ounce. Platinum is over $1,000 an ounce. But silver is... Now, if you want the full breakdown of my exact portfolio allocation for surviving a stagflationary depression, I just recorded a deep dive video for insider members where I go through every single position I am holding right now. I talk about my silver allocation. I talk about my gold allocation. I talk about the specific mining stocks I am watching. I talk about the commodities I am buying. I talk about the cash reserves I am holding. And I talk about the defensive positions I am taking in case this gets even worse than I think it is going to get. So click the join button right now to become an insider member and get access to that video along with all of the other exclusive content that I do not put on the public channel. This is not a sales pitch. This is a survival guide, and I want you to have every single tool you need to make it through what is coming. Let me talk about the Federal Reserve for a second, because they are the ones who are supposed to manage this crisis, and they are completely paralyzed. Jerome Powell is stuck between a rock and a hard place. If he cuts interest rates to stimulate the economy, he's going to pour gasoline on the inflation fire, because lower rates mean more money printing, and more money printing means higher prices. But if he keeps rates high to fight inflation, he's going to crush the economy even further, because high rates mean higher borrowing costs for businesses and consumers, and that means more bankruptcies, more layoffs, and more defaults. So what is he going to do? He's going to do nothing. He's going to sit there and watch the economy burn because there is no good option. And the longer he waits, the worse it gets, because inflation is going to keep rising due to energy costs, and the economy is going to keep slowing down due to high rates, and we are going to get the worst of both worlds. This is the stagflation trap, and there is no way out of it without a massive reset of the entire financial system. Now, let me talk about what happens to the dollar in this scenario, because this is critical. The dollar is the global reserve currency, which means it is the currency that most countries use to buy oil and most countries hold in their reserves, and most international trade is denominated in. But that status is not permanent. It is based on confidence. It is based on the belief that the U.S. economy is stable, and that the U.S. government can pay its debts, and that the Federal Reserve can manage inflation. And right now, all three of those beliefs are being shattered. The U.S. economy is not stable. It is heading into stagflation. The U.S. government cannot pay its debts. We are sitting on $36 trillion of debt and rising. And the Federal Reserve cannot manage inflation. They have lost control of it. So what happens when the world loses confidence in the dollar? They start dumping it. They start buying hard assets. They start buying gold. They start buying oil. They start buying silver. And they start moving away from dollar-denominated trade. We are already seeing this with the BRICS nations. We're already seeing this with China and Russia settling trade in yuan and rubles. We are already seeing this with Saudi Arabia accepting yuan for oil. And this war with Iran is going to accelerate that process, because the rest of the world is going to look at the U.S. starting another Middle East war, and they are going to say we do not want to be dependent on a currency controlled by a country that keeps blowing up the global oil supply. So they are going to diversify away from the dollar. Now let me talk about silver specifically, because I know some of you are thinking, well, why silver? Why not just gold? And the answer is both. You should own both. But silver has a unique advantage right now because it is massively undervalued relative to gold. The gold to silver ratio right now is about 37 to 1. That means it takes 37 ounces of silver to buy 1 ounce of gold. Historically, that ratio has been closer to 15 to 1, and in some periods of history, it has been 10 to 1. So if the ratio reverts to 15 to 1 and gold stays at $3,000 an ounce, that means silver should be at $200 an ounce. If the ratio goes to 10 to 1, silver should be at $300 an ounce. So you are looking at a potential 2 to 3 times upside just from the ratio normalizing. And that does not even account for the price of gold going higher, which it absolutely will in a stagflationary environment. So silver is the leverage play on the precious metals bull market, and it is the asset that is going to give you the highest return if you are right about the macro environment. And I'm telling you right now, the macro environment is screaming buy silver. Let me also talk about the supply side of silver, because this is a critical part of the thesis. Silver is not just a monetary metal, it is also an industrial metal. It is used in solar panels. It is used in electric vehicles. It is used in electronics. It is used in medical devices. It is used in water purification. It is used in batteries. It is used in all of the green energy technologies that governments are mandating and subsidizing around the world. So even if you do not believe in the monetary thesis for silver, the industrial demand thesis alone is bullish, because we are in the middle of a green energy transition, and that transition requires massive amounts of silver. And here's the problem. Global silver production has been flat to declining for the last 5 years. The major silver mines are running out of high-grade ore. The costs of extraction are going up because of energy prices. And the amount of new silver discoveries is at a multi-decade low. So you have rising demand from industry and flat to declining supply from mining, and that is a recipe for a massive price spike. And when you combine that with the monetary demand from investors who are trying to protect themselves from inflation and currency debasement, you get a perfect storm where physical silver becomes unobtainium. You literally cannot buy it at any price because there is none available. We saw a preview of this in 2020 when premiums went to $10 over spot. We saw it again in 2021 when the mints ran out of inventory. And we are about to see it again, except this time it is going to last longer and the premiums are going to be higher because the crisis is bigger. Now I want to talk about the geopolitical angle, because this is not just about the US and Iran. This is about the entire global order shifting in real time. The United States has been the global hegemon since World War II. We have been able to project military power anywhere in the world. We have been able to control the global reserve currency. We have been able to dictate terms to other countries because we had the biggest economy and the biggest military. But that era is ending. China is now the largest economy in the world by purchasing power parity. Russia has the largest nuclear arsenal and the most advanced hypersonic missile technology. The BRICS nations represent over 40% of global GDP, and they are actively working to create an alternative financial system that does not rely on the US dollar. And the Middle East is no longer willing to just accept US military intervention without consequences. Iran is not Iraq. Iran is not Afghanistan. Iran has a real military. They have advanced missile technology. They have drones. They have cyber capabilities. They have proxies all over the region. And they have the support of Russia and China, who are not going to sit back and let the U.S. destroy another country without responding. So this war is not going to be a quick victory. This is going to be a prolonged, bloody, expensive conflict that drains U.S. resources and accelerates the decline of U.S. global power. And while the U.S. is spending trillions of dollars blowing up the Middle East, the BRICS nations are going to be building an alternative system based on gold, based on commodities, based on bilateral trade agreements that cut the U.S. out entirely. And when that system is fully operational, the U.S. dollar is going to lose its reserve status and the American standard of living is going to collapse. If you want to know exactly how this weekend's naval destruction is going to trigger a historic liquidity shock the second the markets open on Monday morning, you must click the video on your screen right now. I break down the entire Monday morning meltdown. Do not wait, click right here and I will see you in that video.